Hey traders, this is my weekend video. Hey, Merry Christmas, Happy Holidays. So we finished out the last full trading week of the year last week, and it ended on not the best note in the that could be out there. So my basic takeaway of Friday's price action, we had very light volume Tuesday. We had extremely light volume, and on Christmas Eve, and we just rallied right up into majors on the well, that was Tuesday, yeah, Tuesday for the Qs. We rallied really hard, overshot my targets, upside targets on the Qs there. So I was worried, uh, coming in Thursday that we might have a big gap down after because we had most of the tech side of the market had filled the fair value gaps, the FOMC fair value gap. Okay, and so I was concerned, that we might have a big back gap down Thursday, but instead we saw rotation into some of the low-hanging fruit, like the Russell precious metals, Boeing, for example. So we had got that Thursday, and then Friday, it kind of came all unwound. So one of the biggest warnings that I have, indicators that I have of a change in feel in the market, is the 821 MA ribbon. Okay, and the cross of the 821 indicates that the market typically means the structure of the market has cracked at the seams. Okay, and it generally can lead to a period of higher volatility. Okay, so we're basically the structure which we're so used to that we've had the early part of December, into the FOMC, it has changed. Technically from a structural standpoint, we are a different market than we were before the FOMC. Okay, so what are we looking for here? What's that really tell the markets? Well, this typically means that it makes it much harder to do uh, uh, intermediate time frame swing positions, swing long, swing shorts, whatever intermediate. So if you're doing a swing positions, because the structural breakdown has occurred, it becomes much more difficult because we are more likely in a more volatile market than we were before. Now, if you time it right, it's a great time for day traders. Okay, it's an extremely great time for day traders if you get the direction right, if you get the timing right. Okay, because you're going to have high degrees of volatility in both directions in theory. Okay, so just that's a few things that I'm thinking in the back of my mind here. Okay, uh, going forward here into this week. Okay, so basically, what I got going on here on my chart, I've got the on this chart over here, I got the 8-200 MA ribbon. Okay, and then I have a channel right here, right at these lows down here, which is transferring over to this chart over here. And then on this chart, I've got the 820 SMA on the daily. Okay, and as like I say, ribbon has crossed, so we're getting that warning sign of potential higher volatility in the markets, a structural change in the markets because triggered by the FOMC 2 weeks ago or last week. Okay, so be very mindful of that scenario. So, in theory, what I'm looking at, you see this channel right here, and we're at the 61.8 of this channel. Okay, this breakdown channel here. So I would be, see if I can draw something here. So what I would be looking for here is the potential of coming like this. Similar situation like that. We're into this mid-range, this channel potential. So this is a primary thesis that I'm thinking that's going to be playing out here. A whole bunch of chop right here in the middle, setting up here for maybe for a prolonged period of time here. So be mindful of that for the next couple of weeks. This is the primary thesis that I'm potentially looking for here. I mean, it doesn't have to play out this way, but this structural break, uh, it doesn't mean it makes it much more difficult to make the all clear scenario for swing traders. Okay, if you're a swing trader, you know this here is a big warning that we've had a structural uh, change in the markets. So be very mindful of that scenario going forward here. Okay, and these lines that I have on here, these are your supports and resistance areas. Okay, so what we did manage to do here, off these all-time high levels, we've come back down. Uh, and Friday we lost that support, the very first support, and we came right back and back tested it. So coming in Monday morning, we might be gapping up. We could be very well gapping up, okay? But the same token, we've done a 61.8 of this channel. We've done the 61.8. So gapping down, it could get, it can come down pretty quick here, So be very mindful here that, any type of gap down Monday morning, that suggests that we're going to be uh, trading quite a bit potentially quite a bit in this trading range. So definitely keep that in the back of your mind. This could be it could be days, could be weeks. Hell, we could be sitting in this, you know, you know. So we'll see what happens here. Uh, Everybody's thinking that you're going into inauguration, everything's going to be bullish. So the bigger trend is bigger. The odds are that we will probably be opening green Monday morning. I mean, if we do, great. I mean, it's wonderful if we do. Uh, but if let me see if I can. Even if we open green, let me tell you something here, guys. Even if we open green Monday morning, we've still got our MA ribbon above us. You've really got to clear. You've really got to get back over 6,000. I mean, to start seeing directional buyers, bullish buyers to come back into the market. Okay, so we have to be very mindful here. Below 6,000 isn't you know. Uh, it's very dangerous in these markets below 6,000. So we have to be very mindful of that scenario. Okay. Sorry if there's any background noise. My cat's have playing and having a great old time here in the background. Okay. So heads up on that. Okay. NDX, similar situation. So, if I zoom in here, I got a channel here. Oh, I got a MA ribbon. Okay. 1 second here. Sorry, I had to put the channel. The channel, which I've got currently drawn on NDX, it's actually broken as of uh, Friday. We broke a critical support area on the NDX. So technically, trend wise, we've broken a bigger trend uh, area on the Nasdaq Friday than what you would otherwise think. That's why when I went into the weekend, I was telling everybody, uh, if you had to do anything for the going into next week, you would still want to be leaning more to the bearish side based on the way we closed last Friday. So be very mindful of that. So that's not going to say my cat's wanting attention. That's not going to say we're not going to be. It's not going to immediately get bought up there next week, but it's something definitely to keep on watch. The trend has started showing some weakness there, but I also want to point out the MA ribbon has not crossed bearish, so this is a more bullish chart pattern. I mean, so just be very mindful of that as well. This is a much more bullish chart pattern versus the S&Ps. Okay, the S&Ps are the ones that have actually crossed, warning us of that we are potentially going into a structural change in the markets, where the Nasdaq has not given us that signal yet. Okay, so I definitely want to keep that in mind. So trend wise, we're showing a little bit more weakness, but the MAs have not given that. So definitely keep that in the back of your mind. And the Russell. Russell now, I don't know where my cat went. The Russell's really been acting bad. Okay, it's really been acting pretty bad here. So uh, uh, we've had an EMA cross from the 16th, December 16th. I mean, it actually crossed before the FOMC came out. You know, giving us this that bearish signal here in the FOMC. Let's see here, Andrews bullish. Okay, and so be mindful of that. Uh, so we lost this major critical support right here on the Russell. Let me see here if I can find another one down here where we're currently trading at. For some reason it didn't. Yeah, I did. Yeah, I did. There it is. There it is. I just drew it in. Okay. There you go. We're currently trading up here right above this right here. So heads up on that. So losing we got to stay above that. The 2250 area. We need to stay above the 2250 area. Okay. And and I do want to point out also we came back up even in a very bad tape yesterday or Friday, and we did manage to close right near the 8 EMA or 8 SMA. So that is something to definitely. So they might be bottom fishing into the Russell, even in a very bad tape there. Friday, they were trying. There was a little bit of rotation there into the afternoon, into the Russell. So definitely keep this one on watch. Maybe they're finally trying to rotate into the Russell out of some of the other areas of the market. Um, so uh, it had a much better recovery from the carnage, Friday's carnage. So, you know, buy the dippers, we might be getting signs of some buy the dippers are trying to rotate over into the Russell. You know, this has been an extremely long sell side action here. So, uh, definitely keep that in watch in the back of your minds here. Uh, so, yeah, so we had a trend line right here. They saved the trend line. Um, so we're into this neckline area, and this does potentially look like a head. So we don't know for sure if this is a head, you know, and this is going to fail and build out a neckline down here or not. Potentially, this is a head and head and shoulders pattern. Okay, so you know, definitely keep that in watch going forward here. Okay. So basically, you know, my main takeaway from Friday. Give you one second here. So basically, what I was looking at here, up here at these highs, we were into the expected market maker move for the week, and we knew it was holiday light trading, and we also knew on ES is that the structure had we had the 821 cross, so this gave a prime opportunity for the market makers just to not participate to push prices any higher, and they got paid. So the street got paid by allowing prices to fall Friday. So that's pretty much what I think is going on here. We have entered a phase in the markets where uh, uh, you know, the volatility, the market makers have a little bit more power to push price, you know, into the predicted models. Or, you know, if we do, you know, potentially break down, the odds favor more of a potential downside break than potentially an upside break based off of the 821 cross. Okay. So be very mindful of that. It's not all clear selling because the structure has changed since the FOMC meeting, in my opinion. So, uh, a couple takeaways that I got going here. This here was a critical support right here. We did not manage to close back above that. Okay, so that is a little bit more bearish to the market, suggesting, in my opinion, since we didn't close above this blue area, we didn't have a closing print. It was better odds if you had to swing short into the first of the week. Based on where we closed Friday. Now, I'm not saying that's what we should have done. I'm just saying based on where we closed, the odds favor. So to be short. So you really didn't want to be net long, heavily net long on a short-term basis going into the first of next week, based off of where we closed out last week. Okay, and it could all change the first of the week. I don't know. We'll see what happens. Okay, uh, so this uh, FOMC fair value gap, is acting as a big headwind for these markets. So there's a very good chance, very, very good chance that we may not be able to maintain any of this fair value gap, into this week. That we could be breaking down. There's a very decent chance that we could be doing that and starting a deeper reset in the markets. So uh, just be very mindful of that in your trading this week. But like I said, there is a structural change on the SPY. It hasn't triggered yet on the NASDAQ. Ideally, if you're looking for bear markets, you really would ideally look for the NASDAQ uh, in general because of the mega caps to be their indicators to be leading the market for a big correction. So that's why I'm sitting here saying here, you know, buying the dip is probably still a valid scenario because the Nasdaq isn't doing that. But by the end of the week, that could all change. The Nasdaq could actually be a lot worse than the S&Ps. You just don't know. The script could actually flip. But see, the Nasdaq on this little reset from Friday, it was coming off of a much higher base versus the S&Ps. Okay, so just be mindful. That's why those MAs haven't crossed. We had this mega up thrust in the Nasdaq, so it takes a lot more percentage decline to reset those bearish indicators. For a flip in those indicators. So be very mindful of that. Okay, similar situation here, guys. Okay. Uh, So we got two fair value gaps, one below us, one above us here on NQs. Okay. Just be very mindful of that. We did not manage to come down and fill this lower gap here Friday, so we're kind of stuck in the middle right here. Okay. But based on the trend, you know, it does seem like we've got a little bit more relative weakness as of Friday in the megatech. And they were trying to start tip. They were. It looked to me like they were starting to poke their toes into the Russell once again there Friday, and we may have an early, uh, uh, situation next week where we're going to see an outperform in the Russell. We've been looking for it. Going into the first year, potential outperform in the Russell. So definitely keep that in the back of your mind. And for that to happen, we probably really need to see the bond market to stabilize. Let me check it out real quick. So what we're looking at here in the TNX, we're coming into this multiple topping area right here, okay, on the TNX. Keep in mind, at this point, last time we were poking outside the Bollinger Band. If you notice, it's still inside the Bollinger Band this time. So this is technically more supportive of higher yields. This slow grind higher, and it's a much more moderate slow grind higher into the higher yields. This is actually more supported for a back test or for a breakout up into the 4.9% here for the TNX potentially here. So be very mindful of that. I would think in that situation, uh, you know, that would be not the best scenario for the Russell and and other aspects of the market. So be very mindful of that. We got a 100 basis point cut from the Fed, and at the same time, we've had a 100 basis point increase in the 10-year yield. So, uh, so net for net, we got a 200 basis point change, positive change in the 10-year yield since the Fed started its rate cut cycle. And some of the stuff that can be driving this, the default rates are starting to creep up here on mortgages, personal loans, consumer debt. Uh, this, you know, you think about it, the average person now is over $500 on a car payment. You know, that's a big payment. Okay, guys, and you know, we have to be very mindful. That's, plus all the government spending that Trump has planned. Trump has more but government spending planned than even the Democrats had planned. So this is all inflationary policy that is potentially going to continue to drive the yield to higher highs here. So, the bond market has been broadcasting for months now of bigger problems in the economy than what the stock market itself has been broadcasting. So this here, if anything else, is helping support the thesis that we have entered into a more volatile period in the S&Ps based off the pattern that I'm seeing. And this by itself is telling me a lot that the markets are uh, in a lot more trouble than what people realize. Okay, if the market's going to correct, some things that you really want to look for here. I went on a weekly on the Apple here. You see the Apple, we have a topping tail here. Okay, topping tail on the weekly time frame. You got your yearly volume profile. Topping tail came right into our trend line resistance. We would want to start seeing Apple starting to lose some of its gains here for the bearish scenario. So I would be looking early on this week, have an alert below last week's lows, and see if Apple starts breaking last week's lows this week. Could be very well a high probability. Like I said, it looks like uh, you know it, the trend is actually gotten a lot worse for the Nasdaq from a technical standpoint than what you actually see it with the S&Ps. So be mindful of that. Uh, Microsoft, some things. Is there anything I could just come out and say here on Microsoft? Um, Not really here. Microsoft's just not looking very good. So uh, looks like a lower high here. This is yearly webs. Let me go down to the. There you go. There you go. This looks better now. It's not looking too good here on Microsoft. So definitely keep this one on watch. We came down. We back tested this. So basically, if we start losing, if we start getting back below the 428, we would want to be net short. 428 as our line of stand. We're coming right off of it as of Friday, 428. Major critical back test area that we just came off. Let's see, we've already come down to that once before, so remember that. The more times you hit these support areas, and if they eventually break, that's their second attempt down here at the 428 on Microsoft. That's not good. AMD is just not isn't ugly. We had a nice little rally early in the week in AMD, but man, all in all, AMD is just an ugly chart. Okay, so just be very mindful of that. We had a nice little relief rally in AMD, but it's just pretty much an ugly chart. Nvidia, they were actually uh, uh, Nvidia just hasn't been doing very well for a while now, so we're just chopping sideways here. Tesla looked like it was about ready to break support. See, I got a major support here on Tesla. We closed on a major support on Tesla here. If we come in breaking Friday's lows Monday, Tesla is actually setting up a potential short setting up here. So Tesla uh, up and anywhere up in this area here, I really didn't want to short Tesla, but now if we start breaking this level, it's actually starting to look as a short. So be very mindful of that if we were to start breaking Friday's lows on Tesla. Google's looking pretty good still. This is our support. Still looking good on Google. Meta's still looking pretty good. Yeah, Meta's still looking good. Netflix, it looks like it might be. We looked down below support Friday. We're coming back up, back testing it. So technically, resistance is a shortable possibility as long as, you know, potentially a short here on Netflix setting up here. Amazon, potential short. We lost support Friday, came up to back test it, potential short. Below 225, you got to look to the short side, above long. Okay, guys. Okay, that's just a few of them, and Broadcom's still looking really good here. Well, actually, no, it isn't. Okay, there you go. We're right into the uh, Bull Bear cross line. Okay, so below 240. Below 240, we want to be looking for some profit taking in Broadcom. So heads up on that. That's another one we really has been a major beast. So if Broadcom were to start to lose 240 and the market's trend is starting to turn negative, that's another one we want to look at. Palantir should be another one I should have on my charts here. And then I'll stop my video, guys. Palantir, I don't have it drawn out. I'm sorry. Uh, so heads up. Actually, it did a lot of damage there Friday. So heads up on that. So uh, I don't know where that support is. I didn't have it drawn out for it came on. Okay, guys. Okay. Like the video if you like it. Gonna retweet me at Gumby9662C if you get a chance. And guys, good luck trading. I do have a Discord room if anybody's interested. Just DM me or write a comment below if you're wanting to get in. It's all free stuff. So I appreciate all you guys watching my videos. Thanks a lot.